Southern Africa's biggest hotel group, Southern Sun, released its financial results, which show a 12% increase in operating profit and a 30% increase in adjusted headline earnings for the year to 1 billion rand. The group's income was up by 9%, while occupancy increased by 2.2 percentage points to 60.8%. SABC News Economics Reporter Liabo Setho spoke to CEO Marcel Van Aulock earlier today.
Southern Sun has, 80 hotels across the country and 9 offshore. I've seen that you've got quite a sizable budget, maintenance budget that is of around 450 million. What projects are on the horizon for the group, and how do they fit in your strategy to increase occupancy?
So where we're quite unique is we own most of our properties. And a lot of hotel companies are just management companies, and they don't actually own the physical real estate. We own most of our properties, and that means you've got to look after that real estate. So we spend about 500 million a year in maintenance capex and about another 200 million in just pure repairs and maintenance. But that keeps our portfolio fresh. That's generally looking after. We've always got sort of refurbishments and so on. We have 95 properties, as you say, overall.
Yeah.
So we've done some big projects in the last year. We've got another 6 or 7 coming this year, and it ranges from the Southern Sun in Newlands, which is a relatively small hotel, to Mount Grace, which is a big spend. Cullinan was a big one last year, and it never goes away. I've been around long enough that I'm now refurbing hotels that I did 15 years ago, back on the refurb thing, and you've got to put that money into the properties and keep them fresh, otherwise you become irrelevant.
Yeah. Some of your concerns that you had during your investor presentation were some of the hotels, for instance, the one in Durban. Can you please just let us know about what's happening in that part of the world, that's leading to you not being so sure about it?
So Durban is a sort of historical thing. It's a land lease that was a 50-year land lease entered into 50 years ago that expires the end of this year. The city basically takes ownership of the building at the end of that lease. They've put that out on tender, which we participated in, and we were the only bidder. And we now have to conclude the new lease over the land and buildings going forward. And that's the process that we're going through now. Durban is a unique challenge. I have a lot of faith in the beachfront.
Right.
The problems we had in Durban in the last year, our profits were down there, some 25%, whereas Cape Town was strongly up, Joburg was strongly up. It's not a water quality thing, it's not an infrastructure thing, it's a sentiment thing, and it's groups and events. When Durban has groups and events, it absolutely flies. But a lot of those things, we can't just get them there. You've got to have the city involvement. So we're working with them closely on the one hand, we need security of tenure over the buildings. On the other hand, we need the city to bring in the events that we've had. And I use the example, we had the Nedbank Cup, I think 2 weekends ago. We had African Derby last week. We've got 2,000 rooms on the beachfront, packed, absolutely packed, and the place was heaving. It was fantastic to see. So when Durban goes like that, it just works. But you need those events to keep it going. There's not enough day-to-day transient travel. You've got to have the big events. So Durban's a challenge at the moment, but I think we're making good progress. I think we're better than we were 5 years ago, to be honest.
Yeah. There were some doubts that led to some lack of spending by corporates and governments due to the uncertainty around the budget approval. Now that the budget has been tabled, it happened yesterday, as you may know, did it give you any confidence as a business? So
confidence, it's not so much our confidence that counts, it's the confidence of our consumers. And there's 2 things that really drive that. Do they have money in their pocket, and do they feel happy enough to spend that money? Our consumers are just about everybody. It's local leisure, it's international leisure, it's local business travel, it's government business travel, it's big groups and events. All of that is driven ultimately by sentiment. When you've got something like a budget debacle that we've had now, where it hasn't been passed twice, all great for democracy, but it makes uncertainty in the system. So government, for example, like if you're a government employee and you've got your process that you have to do this year and you don't have a budget, what are you going to do? You're not going to organize a conference, you're not going to travel, everyone's going to seize up. So uncertainty creates a lack of movement or a lack of desire to spend. Things like getting it sorted out yesterday, stability in government, stability of policy, that's where you very quickly get economic growth, and we're not talking about 1.5%, but we jump to 3%.
Yeah.
In that environment, our occupancies will ramp up substantially, because when there's economic growth, people travel. They want to grow their businesses. The budget's open for travel. They want to be on the move. We saw this in the early 2000s. We saw it post the financial crisis. We saw it post-COVID. That desire to travel comes back very quickly. So uncertainty is the enemy, and any form of stability, immediately you'll see travel pick up, whether it be leisure or business, doesn't matter.
Yeah, you spoke about the tourism and also events. There's anticipation of the spin-offs from the G20 in terms of tourism, as well as the MICE industry. How much do you expect this G20 presidency in South Africa to boost occupancy revenue?
So I can't give you an occupancy number because it won't materially move our occupancies, but G20 is big for us. I mean, we will host most of the big events in Sandton. We run the Sandton Convention Centre, and we run pretty much all the hotels around that. So you'll find the core, what you will think about G20 is the heads of state, sort of 2,000 person heads of state banquet dinners. We host all of that. There's also a lot of spin-off on the side. So you've got media, you've got SAPs for security, you've got all the ancillary services that manages a G20 event will fit into our outlying hotels that will come with that. And countrywide, we've had Reserve Bank events in Cape Town, we've had events in Durban. So G20 is great for us this year. But to be honest, there's always something. Last year it was BRICS. A year before that might be a British and Irish Lions rugby tour. Next year it'll be something else. So we host all of that sort of stuff. This year it's G20, and it is very good for us. It certainly puts South Africa on the map. And the more those people visit here, it will result in tourism in the end. Because if you come to South Africa, you will want to visit again.
Yeah. Some of the things that you said to the investors yesterday was talking about the simplification of visa regulations for the Chinese and Indians, that they would stimulate tourism. Would you say you're already seeing the benefits of the reforms that the government is doing with regards to the visa simplification
not in
process?
straight tourist numbers. We're not seeing millions of Chinese and Indian visitors in our rooms, but we are seeing it in the pipeline. We're seeing interest. I mean, I spoke to the head of Westgrow last week, and they're very focused on getting direct flights out of Mumbai and out of China. If you don't have a visa regulation process that works for the tourist, you may as well not bother with the flights. And that hurdle has now been cleared. So Home Affairs has done a spectacular job at sorting that out. What's interesting is South African tourism likes to talk about 10 million visitors a year to South Africa. And to be honest, from a tourism point of view, that's nonsense. We have 3 million visitors a year. The other 7 million are people coming over the borders that have an economic impact, but they're not tourists. It's Zimbabwe and Mozambique, Swaziland. They're not tourists as you classically think of tourists. 3 million is a tiny, tiny number. You can double or triple that if you access the big markets by just a fraction. And that's where the potential of this. And it's not going to be a one-year thing. It's not going to be a 6-month thing. This is years in building. I mean, one of the reasons the Cape Town is so successful is 20 years of building that convention business, that direct air access, making... 20 years ago, Cape Town was a dorpy by the sea that no one really knew. They've put it on the map through long-term investment in this. And if we get that right on the Chinese and Indian market, that 3 million tourist number that's been around for ages can become 6 or 9 very, very strongly. And that's the big potential upside.